Good morning. You're watching The Market right here on ET Now with me, Aisha Faridi. I've got Nikunj Dalmia, Abha Bakaya as well joining again. The way we started off the week, I'm afraid we're going to end the week as well with the same kind of movement. That big speed bump that we saw on Monday could well be replicated given the kind of morning cues that we are starting off with. What with that massive slide coming in on US equity markets and the SX Nifty as well indicating quite a bit of gap down start for us. So back to square one within a week, Nikunj.
Aisha, we fell on Monday for a different reason and today we will fell for a different reason. Yes, the end game or perhaps the beginning of the week, like you said, the pattern may replicate itself, but the factors which are at play are very, very different. Now, why has US market sold off? The easy answer is it was getting frothy, it was getting choppy, and it was getting too hot to handle. There is no large macro or a news trigger which could be attributed to last night's sell-off on Wall Street. So as of now, one would assume that the tech stocks had really gone through the roof. They had become a popular. There was, there was only optimism and no cynicism. Global markets had forgotten that equity markets come with an inherent element of risk, and that has led to last night's sell-off or chaos in US markets. Look at the stocks which have sold off, largely US tech stocks. Look at which stock led the decline, 8% down for Apple, which is, well, world's largest company, $2 trillion. May not be $2 trillion after last night's fall. But as of now, one would say that last night's sell-off was not an event or a reason or a data-driven sell-off. It was a sell-off which perhaps was largely on account of profit booking. Market had overextended themselves, and a bad day or a bad patch was always perhaps around the corner. And unfortunately, we are staring at that right now.
Absolutely. Nikunj, there's a question mark as to whether this is just a long time coming, given the kind of valuations we were trading at, and also whether or not it's actually the start of a longer correction. And what cues should we take from that, given that we're already fighting resistance around that 11,500 mark? We've seen, of course, mid caps continue to outperform, but struggling to really move ahead on the index.
No, so Abha, let's understand that what are the pillars which are driving markets higher. The pillars are central bank liquidity, economic recovery, and demand both on the consumer side and on the corporate side, which surely has surprised us. I guess somewhere the global consumer has surprised everyone, both in their ability and also in their understanding of how the pandemic crisis and how demand would move. So if you really ask a very basic question, that the factors which are fueling or propelling the market action, are they at play? The answer to that is absolutely yes. And you should not be in a hurry to assume that this is end of the rally and we've topped out for the year and we could be in for a long stretch of correction for a long period of time. You can't say that because it's too early to judge that. Now, what you may actually see, well, you could see a patch of consolidation. You could see this market, which in a sense, I'm talking about our markets here, which was going higher largely because of a rising tide phenomenon. That may just not be the case. You will see select few, you will see a complete separation from weak stocks and good stocks. Banks which are underperforming in India, they may underperform, we'll talk about it. You may see some profit booking in some of the platforms, some of the IT stocks. So these are factors which cannot be ruled out, but I think one should not be in a hurry to say that we've peaked out for the year and this is as good as it gets and now it's time to either take some chips off the table or go off. Because for those who've been in a hurry to call the market top, I guess they've got it completely wrong, and one should not be in a hurry to call a market top right now.
Sure.